Kezia Samuel, Deputy Chief Investment Strategist. Happy New Year to all. Let's take a quick take on what drove the markets in 2024. Now, the S&P 500 climbed 25% for the year, fueled by a very strong economy and also artificial intelligence. This drove the rally in just a handful of big technology stocks. It notched 57 record highs during the year and delivered 2 consecutive years now of 20+% returns, a feat that we've not seen since the late 1990s. This was driven by, again, as I mentioned, a handful of those AI technology stocks, and we've dubbed them the Magnificent Seven. What are they? Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla. Now, these 7 stocks accounted for 55% of the S&P 500 index's total return in 2024. Looking abroad across the pond, both developed and emerging market stocks struggled in that last quarter, the fourth quarter, because of tariff concerns, as well as the dollar had risen given some of the domestic policies under the new administration, and thus ended with more muted returns for the year. Last year, though, was once again a year that was bifurcated in the markets. We saw the US beat out international markets. We saw the US also being driven by a handful of those stocks. And what we've seen now is, as a result, the index is very close to having very few stocks beat out the S&P 500 as a whole, and now sits at the post-1990s low at roughly 30%. And the top 10 stocks now make up nearly 39% of the index, creating a market concentration. Now, why do I share this? It's because investors, it's really important to note that we not compare our portfolios to the S&P 500 index as that sole bogey, given that your diversified portfolio will include stocks, and not all stocks have participated in this party, so to speak, equally. Switching lenses, let's talk about bonds. Now, in an interesting world within bonds, even as the Fed began cutting interest rates, the yield on the 10-year Treasury note actually rose, and that was driven due to concerns from the deficit as well as inflation possibly not going away sooner. This rise in yield led to lackluster returns for bonds, and longer-dated bonds, in fact, fared even worse. On the other hand, though, lower quality bonds that were less reliant on interest rates outperformed as the economy remained resilient. Finally, a few other investments to mention that are noteworthy. Gold outperformed the S&P 500 for the year. Why? Demand for gold was fueled by central banks from countries like China, India, Turkey, all looking to diversify away from the US dollar, and also for those investors that are worried about the size of our debt and what it would mean for the dollar over the long run, caused gold to be an outstanding investment in 2024. Overall, though, there's no way to dissect this. 2024 was a banner year. Even a globally diversified, moderate risk 60-40 stock bond portfolio gained 10.1% to close out this record year. With that, thank you for listening. Until next time, I'm Kezia Samuel.